Joining me now with more is Jason Blackwell, Chief Investment Strategist at Focus Partners Wealth. Jason, great to have you on the show this morning. And as we see the Dow Jones Industrial Average soar to a new record high, what do you make of the market at these levels?
Yeah, thanks for having me. I think we went through a little bit of a pullback over the last week or so. Our view has been and continues to be that this was just normal market volatility coming through. When you're operating at higher valuations, you're going to have a little bit more volatility in stock prices. But overall, we think earnings season has delivered the receipts we needed for a continued rally from here.
Let's focus in on earnings a bit here. We are toward the tail end of the season. The semiconductors, even though they're a large part of the market, typically are the last to report well after other technology names. So decent results in the past 24 hours and guidance, we should note, from AMD, from NVIDIA partner Han High Precision Industry. What does that tell you leading into NVIDIA's results that are due out in a little over a week?
Yeah, we continue to see that AI CapEx spending boom continue, and we think we'll probably see that come through in NVIDIA's results as well. As we think about earnings season broadly, you came into this quarter with a view that we were going to be in the 7 to 8% earnings growth rate range. We're actually on track to be greater than 13% with fairly healthy margins with that as well. We think that tells actually a fairly broad-based story in terms of where the earnings growth is coming from. And certainly we could see some additional boosts from the additional semis to come.
Yeah, Jason, you're not the only guest who's joined us on the show around the market open that is bullish in the long term on stocks, or at least sees that uptrend in the market still in place when looking at the charts and the fundamentals like I know you are doing there. So if we do see more of a pullback, we're a little bit off record highs for the S&P, for instance. Is that a buying opportunity? And if so, which sectors look attractive to you?
Yeah, I think investors have been pretty well trained over the last couple of years to buy those dips, and sometimes the dips are a little bit more profound than what we've seen over the last week. But I think that's been a generally good playbook. One of the things that we're really watching for is, does this AI trend begin to broaden out from just the call it picks and shovels into more the users and enablers of AI? And that's where we think you'll continue to see some opportunities and perhaps some additional margin expansion. And so really building out that buy list of things you want and then being able to act quickly, I think is going to be pretty clear.
Yeah.
Importantly, there's a lot of strategists out there that'll throw out there's going to be a 5-10%, decline over the next year or two. That's a pretty easy stat to make when the S&P typically falls on average 14% in a given year. And it also typically ends up. And so we're going to continue to look for those opportunities to be opportunistic.
Let's talk about another factor fueling markets of late, certainly, and that is expectations that the government will reopen as soon as this week. The House set to vote today. Then it goes to the president's desk for signature. President Donald Trump has already endorsed this particular deal, ending the longest shutdown in history. What does that mean for the economy, for people who want to stick to their holiday travel plans during the busy time of Thanksgiving?
No, I think this honestly couldn't come soon enough. When the government, first went into shutdown mode, we made the point that really you don't see a large economic imprint from a permanent standpoint outside of, heavy tourist areas around national parks. That story started to come a little bit at risk as we moved into the holiday season, where you were having more travel disruption and you were expected to have even more travel disruption. That would have been a bit more of a permanent economic impact. Having this reopening happen ahead of Thanksgiving and giving the chance for airlines and TSA and the like to get caught back up really brings down the risk there a significant bit. The other piece is there was some debate as to whether furloughed employees were going to get their back pay. That seems to be intact in the deal, and that should also lessen that government impact. The last part is just looking at all of the data that we're going to have to digest as investors over the coming weeks and months as the BLS and other agencies start to figure out how quickly they can get us more jobs data, inflation data, et cetera.
All right, Jason Blackwell, Chief Investment Strategist at Focus Partners Wealth, joining us from Atlanta this morning. Jason, thanks again.
Thanks for having me.